We'll go ahead and get started. So this is a question that I get asked all the time. So why haven't we done more deals in Northern California or in Southern California? Well, the answer to that, quite candidly, is 2-3 years ago, price-to-rent ratios just were not in alignment in Northern or Southern California to make it to where it was palatable for the residential real estate investor. So what's changed? Well, this before you, what you see is what's changed, a perfect storm of opportunity. I'll start with just to the left of center at the top. The big driver, really candidly, is historically low prices. I mean, we have seen prices obviously shift really dramatically. We have some statistics that will show you in just a few minutes about how much that it's moved. But historically, prices are very, very low. This has created, of course, affordability, which has allowed prices to come into a price. Rents have not slipped to the same amount that prices have, which has created some interesting opportunities from an investor standpoint, making residential real estate in Northern California more affordable. For the first time in a generation, perhaps ever, we have not only historically low prices, but we also have historically low interest rates. There have been times where prices have slipped in California, Southern California in the 90s, Northern California in the 80s, but in both those times, rates weren't as aggressive as they are right now. Money is very inexpensive right now, and so are homes, creating a really unique opportunity for investing in residential real estate. Positive cash flow is back. That's something that we haven't been able to say in California in a long, long time. So having cash flow back in California has really caused us to accelerate our strategy for taking the rigor that we use in analytics and finding properties in Northern California that are going to make sense. This is one to me that's just staggering. You see it on the bottom left there. Prices in Northern and Southern California are falling below replacement costs. Now what this basically means is the cost to build it, it's being sold today for less than what you could build the same home for. That means that you have a great hedge against future downside movement or a lot of accelerated downside movement, because really candidly you're buying it for less than they can build it. And we're also starting to see, again, we have some statistics for you on this, we're starting to see first-time home buyers and buyers moving back into the space. The state of the real estate market, these are some of the stats that I was talking to you about before. In January of 2008, the median sales price was $427,000. Now, in January of 2009, to $200,000. In the supply side, we had a 16-month supply in January of 2008. Now we have a supply side of just shy of 7 months. Days on market a year ago was 70 days. Days on market today, 49. And then sales increased. The volume is almost doubled. 100% increase. It actually is over doubled in the last 12 months. So what we're seeing is people starting to sense that the bottom is here, and it's time for them to move in and take advantage of what's going on in the space.
We have a question, Keith. What is considered a healthy inventory level?
Good evening. This is Frank Richards. So if you look at historical averages, anytime you're at a 6-month supply, you're typically in a neutral position in a market. And if you contemplate the opportunity today, the ability to buy materially below replacement cost, yet you're in a neutral position, it's as though you're buying at the trough, yet demand is accelerating faster than prices. So the ingredients that exist today are unprecedented in California real estate.
So let's tell the California story, and this is true up and down California throughout the state. 2005, this could be anywhere California in any place subdivision. 2005, properties were selling between $229 and $350. That's what they were selling for. Then the properties appreciate, phase one sells out. I mean, there were people whose real estate investment methodology was to go buy early in phase one, ride it up, and then sell and make their money that way. Now, that's not necessarily good or bad. I won't judge it, but I will do is describe it as somewhat speculative. You're hoping that the market doesn't shift. There are some people who got caught in trying to use that as their investment strategy. But let's say, in this example, it goes up to not from low twos to mid threes to low fours, mid sixes. So now you've obviously had a big run up in property values, and that same development now, your cost to replace is $150 a square foot. So to go and construct that property right now would be $150 a square foot, and you could buy it in that same development for $162,000.
And so just to clarify, the $150 replacement cost does not include land. So at $65 a square foot, that is your land inclusive of the improvements, which is an extraordinary opportunity.
What markets, if you could invest, are you interested in? Okay. We have some more areas that are popping up: Folsom area, Outer Sacramento, San Juan Capistrano, Calaveras County, Arnold, Murphy. Interesting. That's very interesting. Angels Camp. Yeah, Sierra Foothills. Interesting. South Orange. Again, Folsom. Okay. Intriguing.
Ooh, I missed one. Roseville.
Roseville, Rockland, El Dorado.
Great ideas, everybody. All right, so we've broken down some of these areas, Piedmont being one that would be considered close to the core. So you've got three buckets that you would put these properties into. Being close to the core, very close into the population and the job centers. Then close to the core, meaning they don't have a long commute, but they are right in the mix of everything, but not in the center of everything. And then third bucket being in the path of growth. They're not necessarily in the core. They commute to the core. It is a suburb of the core. And so a lot of the neighborhoods that you guys have chosen have fit into one of these buckets. So we're going to go ahead and analyze what type of investment would be good in all three of these buckets.
So the core is older homes, higher prices, higher rents, though the rents won't go up at the same pace. It can be closer to jobs and have neutral cash flow to somewhat negative. Then the close in, you're going to have newer homes, but newer homes than the core. Maybe a 70s, 80s, or 90s versus 50s and 40s built homes. More established municipalities will have a better price to rent ratio than what you find in the core, with great cash flow at 20% down. And then as you go further out, so we saw some people mention more outlying areas in Sacramento. Then we saw best price per square foot. You're going to get more newer construction, so homes that were built 2000 and newer, 2004 or newer. You might even be able to get some limited capital or accelerated equity position on those, because those, quite candidly, those areas are feeling a little more pain. And you'll also have the lowest price point. And rents don't erode as you go as far out as fast as price does. So that creates a stronger price to rent ratio. Awesome feedback. Thanks so much, guys. Really appreciate that. So what we're going to do then is kind of highlight a couple of different markets that we have spent a lot of time looking at. And the first one is Tracy.
Ladies and gentlemen, thank you very much for attending tonight. We appreciate your insight. Observations, questions are very valuable to us. My advice to you, as a substantial holder of real estate, I've spent millions and millions of dollars buying real estate, and wish I had more millions and millions and millions now to take advantage of what is a truly, truly extraordinary opportunity to buy. I would encourage you to contact us. We have very, very high demand for foreclosures in the California marketplace. I had not let our organization enter this marketplace until now. This is a historic time to buy real estate in the state of California. This is not a state, it is a global economy. This is the time. The Central Valley is exciting, Southern California is exciting, the urban core is exciting. There is a map to whatever your investment style is. There is a fit for you today. So the word I use around North Point is smart money buys now. There's never been a better time. Thank you for your time tonight. Have a great evening.